Welcome Investorholics and those new to my channel. This is a continuation in my series of investing for beginners, and as always we're focusing on ETFs. This one is the 5 benefits of investing with ETFs. Hang around, I think this one will be definitely well worth the effort and give you guys a few extra pointers to think about. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. So the biggest plus for ETFs, I think anyway, is just the instant diversification factor. So you know, with one trade you can get exposure to entire markets, or if you're interested in specific asset classes, or even multi-asset classes, with one trade you can get exposure to hundreds or even thousands of companies at once. So definitely reduces down your universe of research that you have to do. So you can focus on Australia or whatever. You want to invest in the top 200 companies in Australia, so really, you've got a half a dozen ETFs to do some research on and then buy. So it just simplifies everything, and you get that instant diversification. So everyone we know loves saving money, and that's one of the good things about ETFs. They're actually a low-cost option. So ETFs cost less than traditional managed funds and substantially less than buying individual shares. So you couldn't go around and buy the 200 top companies in Australia. You just buy one of the A200 indexes. So S&P ASX 200 indexes, and and then you've got it all at once. So you can't really do that at a lower cost. If you try to do that individually yourself, it just wouldn't work. So definitely one of the beauties about ETFs is just the low cost. They're so dirt cheap, those big ETFs, to get into the market. As always with investing, another thing we have to keep in mind is tax, and what we're trying to do with ETFs is make them tax efficient. So research has shown that the average investor typically follows a buy and hold approach with ETFs. I know I do anyway. I don't trade in and out of them. Therefore, index ETFs generally have a lower turnover, minimizing capital gains and improving long-term performance and tax efficiency. So if you're not buying and selling constantly and realizing gains on your ETFs, that means that you're actually not paying tax on those gains. So in the long term, that actually works out much better for you. So if you play it right, we can actually make ETFs quite tax efficient. Liquidity, so pretty much how easy these are to buy and sell. So the bigger ETFs are quite easy, they're quite liquid. So ETFs provide exposure to broad investments in liquid markets. So the bigger markets, they're definitely going to be more liquid than small country markets as well. So the open-ended structure of an ETF means that it can be as liquid as the underlying securities that it invests in. So as long as the underlying securities have lots of people trading them, that gives them liquidity. So the ETF should be quite liquid as well. Another big tick for ETFs, I think, is the transparency. So everybody likes to know what they're owning. So typically ETFs are highly transparent investments that provide investors full visibility of what they are investing in. So most ETF issuers will provide information to the investor such as the net asset value, daily basket of holdings, so that's just what the actual ETF holds. They just call it a basket, but whatever, basket, bucket, whatever you want to call it. Also, I find it quite handy to actually look at the intraday net asset value, and that'll actually give you an idea of the actual value of the underlying assets held by the ETF. and you know, and you can actually use that to actually work out what you should actually be paying for that ETF. So you know, you don't want to actually be paying more for the underlying assets than you actually should. So you know, typically they should be pretty much the same. So if you're looking at one of the bigger ETFs like VAS or STW, they're quite liquid, so there's always people trading in and out of those. So the net asset value and the share price will actually, for the ETF, will actually be pretty much the same. So it's always good to actually have a look at the intraday net asset value, just to make sure that you're not paying too much for the underlying assets held in that ETF. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon, and crack your financial sky. Thanks guys, see you later.